Let me know, right? More and more capital formation or capital addition is good for the economy. Does it make sense to you or not? Right? If you want to, some of you are saying no, right? Those who are saying no, please tell me what is your answer. Please tell me why. Why are you saying no? I am saying more and more capital formation, that is addition to the capital, is good. Why? If you keep on adding more and more capital, does it not mean we are producing more goods and services? Does it not mean, right, more investment is taking place in India? Right? Does it not mean more and more employment is getting generated? Of course, yes. Right? Of course, yes. Argument is if more machines are added, labor demand will decrease. Who said so? Right? The argument is if more machines are added, it will always reduce the labor demand. Please tell me, is it always? Think of it. Does it mean always? No, my dear. Right? If more machines are purchased, more manufacturing of the machines is taking place. More manufacturing is taking place means there the employment has increased. If more machines are purchased, more labor will be used to operate them. And so it doesn't mean always there is a decrease in the labor. You're talking about artificial intelligence. I hope you understand. You're talking about artificial intelligence. And please tell me any survey which categorically says with artificial intelligence there is always a reduction in labor. Right? There is a differing opinion even here. Right? You can read multiple sources. There is a differing opinion here also. Right? Because some of you will simply say, sir, I'm introducing a robot. Right? A robot is used in manufacturing of, let's say, a car. Now the people will not be needed to manufacture a car. But think of this. Don't you think if a robot is introduced, somebody has to manufacture robots? I hope you understand. That is the reason there is no conclusive evidence to show that artificial intelligence will always reduce employment. Yes, there is a concern. Some people say it will reduce, some experts disagree with that. Right? Because we are yet to use the idea of artificial intelligence at a very high level. It is a starting point, right? We are introducing it now. We are not using it extensively. You'll have to wait and see what is going to happen in the future. Okay, let's start. Right, so savings, investment, as well as capital formation. Now, there is one formula. Please have a look at this. There is one formula, that is a rate of capital formation. Now, what is this rate of capital formation? It is investments divided by GDP. New term to all of you. Investments are divided by GDP into 100. Now, what is GDP here? GDP simply stands for gross domestic product. GDP stands for gross domestic product. Now, what do you mean by gross domestic product? Please understand. Gross domestic product simply means market price of all the final goods and services which are produced in a country. Don't worry, right? Sir, you are not writing the formula or you are not writing the definition. It is there in the slide, so don't worry. Let me show it to you. Just give me a minute. Let me show it to you. Please have a look at it. Gross domestic product is the market price of all the final goods and services produced within a country for a specific time period. So is the definition okay with all of you? What is GDP? Is the definition okay? We'll discuss the details later. Don't worry. We'll have a detailed discussion about GDP after some time. Please do not be worried. So argument is you want to calculate rate of capital formation. How do you calculate it? You will take the total investment done in an economy. You will divide it by the market price of all the goods and services produced in India into 100. Now, please tell me, is it okay if I say higher the rate of capital formation, good for Indian economy? Increase in the rate of capital formation, it is good for Indian economy. Can we go forward? Can we go forward with this argument? Okay. Now, next, whenever you talk about capital formation, why this is necessary? Why it is important? It will increase the production of economy. The overall production in the economy will increase. It is associated with increased labor efficiency. That is, let's say a new technology is introduced. From 2G, you will shift to 5G. Don't you think labor efficiency will improve? Basic idea. Don't you think labor efficiency will automatically improve? Third one, it is always associated with the technological progress, right? Because you're investing more and more money in the economy, research and development will always keep on increasing. Higher rate of capital formation is always associated with technological progress. Fourth one, it is always associated with a better utilization of resources. And think of this, it is always associated with better utilization of natural resources. That is, let's say you're using minerals. Now, with better technology, can you improve, right? The let's say how much minerals you are able to extract from the land. Think of it, right? You want to purify water, right? Water is a resource, right? With better technology, can you purify water much faster and supply it to the consumption or to the people? And there's a particular reason. There's a particular reason I'm telling you about water purification here, right? If you're reading about what is happening in Delhi, please tell me the excess rainfall in Delhi, it has affected drinking water supply. Correct or wrong? Not just in Delhi, in many other places. Many other places. Excess rainfall in many of these places has affected supply of drinking water. Some of you will be wondering, how, sir? Right? More rainfall means everywhere water. How is going to affect right drinking water supply? My dear, you cannot drink the rainwater directly. Right? You cannot simply tell the people who are sitting in the footpath, right, water is already there, drink it. Right? So it has led to flooding. There are various plants. There are various plants which are involved in basically purifying the water and supplying it. And because there is a flooding in all of these regions, these purification plants, water purifying plants have been shut down. And because water purification has been disrupted, drinking water supply also has been disrupted. So that is the reason, right? These kind of questions can be asked. Please be very careful. Better utilization of natural resources. And finally, it is always associated with rising demand, rising supply of goods and services. Right? So these are certain reasons why we say higher capital formation or capital formation should always keep on increasing, should be higher. Right? So these are certain points. Let me go forward. So GDP and investment is simultaneously increase or decrease? My dear, please understand, we want both GDP and investment to increase. Right? We want both GDP and investment to increase. Right? We want both of them to increase. We do not want right both of them to decrease. That is a bad outcome. Okay, let me go to the next one. Right? Basically, the capital formation. We are discussing idea of a capital formation now. Basically, the capital formation is divided into two parts. One is called as a GFCF. Look at the long form. It is there in the right side of the slide. Second one is the stock. Right? Stock is a variable. I'll come to that. Don't worry. One is a GFCF. Second one is a stock. Please look at the example of GFCF first here. And don't start asking what is GFCF. It is already there in the slide. Gross fixed capital formation. What is the meaning of it? I'll explain. Look at the example. Infrastructure such as a manufacturing facility, machineries, means of transportation, roads, etc. These are the examples of gross fixed capital formation. And look at the examples of the stock. Change in the raw materials, inventories, finished and semi-finished goods, etc. These are called as stock. Now, what is the basic idea? Please go back to this sequence and tell me, this company takes a loan of 25 rupees. That's an example. Okay. The company takes a loan of 25 rupees. They can use it to purchase a machine. Correct. They can use it to construct a manufacturing facility. Yes. They can purchase even raw materials. And now, please, is it okay if I say all of these examples we are going to use in increasing supply of goods and services? Think of it. A company will take a loan of 25 rupees. right? They can use this amount of money either to purchase raw materials, to purchase machine, to set up a manufacturing facility, etc. All of this will be used to increase the supply of goods and services in the market. But what happens here is, let me know whether this makes sense or not. On raw materials, can I say the company will keep on spending money very frequently? I'll repeat the statement. On raw materials, the company will keep on spending money very frequently. Very frequently could be on day-to-day basis, on a weekly basis, on monthly basis. On the other side, some of you are saying no. Why, my dear? If you are operating right a company to manufacture this bottle, will you not keep on frequently purchasing raw material for production of this? Right? I don't know what you're listening to, but listen to me. Okay. On raw materials, you will keep on spending money on frequently. And I'm saying frequently because, right, some of you will say, tell me days. From one company to other company, the days will change. Some companies will purchase raw materials every day. Some companies will purchase raw materials once in 15 days, but frequent expenditure is made. On the other side, please tell me, will a company make expenditure frequently on machines? Think of it, right? Will a company make expenditures frequently on machine? If you start a company, every day will you keep on purchasing a machine? Will the company keep on spending will the company keep on spending money every day to construct a new manufacturing facility? Once in 15 years, they will construct a new manufacturing facility. After that, they will keep quiet, produce, and maybe after 10 years, one more manufacturing facility. Now, can you find a difference here? Can you find a difference? What is the difference? On one side, they will spend money very frequently. And on the other side, they will spend money much more less frequently, periodically. Is it okay? Periodically. On one side, they'll spend money periodically, and on the other side, they will spend the money very frequently on day-to-day basis, on weekly basis, etc. etc. So that is the basic idea. Why do we divide capital formation into two parts? One is a GFCF, second one is the stock. GFCF basically refers to that part of the capital, where the expenditure is incurred by the company periodically. And right, the stock is that part of the gross capital formation wherein the company will keep on spending money, right, on frequent basis, right? Very, very frequently the expenditure will be incurred. Any difficulty in understanding the classification, please do let me know. Any difficulty, please do let me know. But sir, transportation money will be spent daily. How it will be GFCF? My dear, you'll purchase a truck. Think of it. You'll purchase a truck. Right? Do you think you'll keep on spending money to purchase trucks every day? Weekly? No. You'll purchase a truck, you'll use it for, let's say, 10 years. Then throw it away, purchase one more truck, use it for 15 years, etc. That is basically the concept here. I'm focused so much on this for a very simple reason. Some of the books have given wrong information. They'll say that the term fixed is there. Right? Have a look at this. They'll say that the term fixed is mentioned in gross fixed capital formation. They'll say that because there is a fixed capital formation, it means these are not movable. I hope you understand. These are not movable, they'll say. Right? No. Please understand. Machines are movable. All of you agree? Machines are movable. Maybe a manufacturing facility you cannot move. Right? You cannot move a manufacturing facility, agreed. But machines are movable, right? But then why are you using the term fixed and saying because of that it is a fixed capital? It is not because of that. It is because expenditure is not incurred on day-to-day basis. Expenditure on this is done periodically. This is basically the division between the gross fixed capital formation as well as the stock. Done? Any difficulty? Right? Any difficulty, please do let me know. Right, so these are the important concepts within the idea of a microeconomics, which you are expected to know for UPSC. Right, basically beyond this, I would simply say don't complicate it. It's not the end of microeconomics. There are so many concepts in microeconomics that we don't want for UPSC, not required for UPSC. Hence, right, I think this is more than sufficient. Let's go forward. Now, let me show you what kind of questions are asked. Let's start. Start solving these questions. Automatically you'll understand what kind of questions are asked, how you're supposed to prepare, right? Whether you're what you're reading, is it relevant or not? Let's start now. Okay, 48% I have answered correctly. It should be higher, no? Should be higher, right? I'm giving you more time to read question and less time to round the number. That's it. Okay, let's start. Consider the following statements. Other things remaining unchanged. Market demand for a good might increase if price of its substitute increases. Correct? Tea and coffee. We have discussed this. Tea and coffee. Right? So price of its substitute increases, demand for a product automatically will increase. Second, the price of its complement increases. Printer and ink. If the price of the printer increases, demand for the ink automatically will come down. 2 is wrong. The good is an inferior good and the income of the consumer increases. If the good is inferior and the person's income increases, what will happen to the demand for the good? Demand for the good goes down, right? Negatively connected. So third one is wrong. The price of the product will fall. So demand automatically should go up. Fourth one is correct. Right option is option A. Now you can use elimination method also. I'm not using elimination method for a very simple reason. Please understand. Instead of these options, if UPSC wants to make it difficult for you, if they want to make it difficult for you, they will give options like this. Only one statement is correct. Only two statements are correct. Only three statements are correct. All four statements are correct. All four statements are correct. Right? So again, understand this. You can use elimination method. I am not using it. And some of you are telling me, Arey Baba, use elimination. I'm not using it. Why? The trend is like this. The new trend is like this, which means, right? Which means you should be able to, right, be very clear with respect to your concepts. Done? Right? So, second one is wrong. Third one is wrong. Right? So, 1 and 4 are correct. Right option as per the new trend will be option B. Only two are correct. Okay? Can we go forward here? Explain third statement. My dear, inferior good. Already forgotten? Income goes up. What will happen to the demand for inferior good? Already forgotten. Today itself we have discussed. Income goes up. What will happen to demand for inferior good? Goes down. Right? Statement says market good. Sorry, demand should increase, but here it is going down. Hence the third one is wrong. Okay. Let me go to the next one. Okay, 53% have answered correctly. It should be more. Which of the following can add to aggregate demand? Aggregate means what? Total demand. Which of the following will increase the total demand in the market? Let's start. Lowering income tax rate. Please tell me, is it not basically the interpretation of what we have discussed some time ago? Think of it. Right? Don't you think this is basically the interpretation of what we have discussed some time ago? Right? Many of you will ask, what have you discussed? Tell me. Right? Basically, if you remember, I said, imagine your income is 100 rupees. Imagine your income is 100 rupees and the tax is 10 rupee. Tax is 10 rupee. What will be the disposable income? Disposable income will be 90 rupees. Now take an example. What if the tax is decreased to 1 rupee? Tax is decreased to 1 rupee. Now the disposable income will become 99 rupees. With higher disposable income, don't you think you will demand more and more goods and services in the market? Let me know. Will you not demand more and more goods and services? That's basically the argument. Okay. Second one, increase in the cost of raw materials. The raw material cost increases. What will happen to market price? Tell me. What will happen to market price if the cost of raw material increases? Will you increase the market price or not? The market price should also increase. And if the market price increases, what will happen to demand? The demand will come down. Second one is wrong. Third one, increase in VAT. VAT is nothing but tax. VAT is nothing but tax. Please go back. Yesterday we have discussed this. Do you remember this? I said government will increase the tax, market price will increase. Let me know if I have not told you. I have told you, I know that. Right, sir, where have you told this? In the context of subsidies and taxes, I gave you example of FAME initiative. I gave you example of FAME initiative, faster adoption and manufacturing of electric vehicles. So if government will increase the tax, what will happen to market price? Market price will go up. If the market price goes up, what will happen to demand? Demand will go down. Right, done. So increase in the tax, again, some of you are saying, sir, you did not talk about VAT. My dear, VAT we'll discuss later, don't worry. In the first class itself, I cannot throw GST at you. I cannot throw VAT at you. Right? If I throw GST in the first class, if I tell you GST in the first class, next day, half of you will skip class. Right? Because initially itself, I cannot introduce complicated concepts. We will discuss, don't worry. We'll come to VAT, we'll come to excise, we'll come to sales tax, we'll come to GST, income tax. We'll discuss, have patience. Increase in the tax will increase market prices, demand will come down. So one statement is correct, right option is option A. Right? Or else basically, in the new pattern will be one statement is correct, two statements are correct, it will be again one statement. Okay? Go to the third question now. Okay, as expected. Most of you have gone with option D, which is wrong. Tell me, today morning we have discussed this. Not very far, right far away, not very long ago also. Today morning itself we have discussed. Whenever you use the term expansion and contraction, is it related to shift of the curve or movement along the curve? Tell me, is it related to shift of the curve or movement along the curve? Movement along the curve. Next question, when there is movement along the curve, what is it changing? Are all the factors changing or only price is changing? Now it should be okay with all of you. Right? When you're talking about movement along the curve, Is it that any factor is changing or only price is changing? Only price is changing. Then how can you choose point 2 and point 3 and come to conclusion D is correct? Think of it. How can you say point 2 is correct, point 3 is correct, and come to conclusion third is correct or option D is correct? No, my dear. Right? Only change in the price will lead to movement along the curve. And when there is a movement along the curve, we use the term expansion and contraction. So right option is option A here. Right option is option A. Any difficulty? It's basic application of what you have discussed. Please be very careful. Be very careful with respect to the questions in UPSC. Let's go to the next one. Okay. 70% have answered correctly. I'm happy. Okay. Income effect on the demand of inferior good. Right? What is the meaning of income effect? If there is a change in the income, simple. If there is a change in the income, either income will increase or income will decrease. Income effect on demand of an inferior good. Please remember, we have discussed inferior good by the way. Right? Income effect on the demand for an inferior good. Can I simply say, when the income of a person increases, the demand for inferior good will go down. And when the income of a person decreases, demand for an inferior good will increase. Please tell me, what is the impact here? Is it negative, right? That is change in the income. Does it have a negative effect on the demand or does it have a positive effect on the demand? Right? In case of inferior good, the impact is a negative. Right? Impact is negative. Right option for the question will be option B, negative. Okay. Next. Okay. Right. Good. 69% have answered correctly. Which of the following statements is or are correct regarding public goods? Public goods are excludable but non-rivalrous. Public goods are non-excludable but rivalrous. Public goods are neither excludable nor rivalrous. Public goods are both excludable and rivalrous. Can I say option C is correct? Let me know. Can I say straightforward? Option C is correct? Right, that is public goods. We have discussed this by the way. Some of you are asking what is excludable now. My dear, right, where were you? Where were you when we discussed all of this before the break? Right? Did we not discuss this? Baba, this is very bad. You are forgetting after half an hour. Then basically there is no point then. Right? So rivalry feature, excludable feature. We have discussed all of this. Right? So right option is option C. Right? So right option is option C here. Okay. Why not D? My dear, public goods. What are the features of public goods? You tell me, what are the features of public goods? Right? Do you remember? Do you remember this slide? What are the features of public goods? These are non-rival and non-excludable. Same question is asking you in prelims. Right? So I hope you understand this. Let me go to the next one. A descriptive question. Okay. Capitalism has guided the world economy to unprecedented prosperity. However, it often encourages a short-sightedness and contributes to wide disparities between the rich and poor. In this light, would it be correct to believe and adopt capitalism for bringing inclusive growth in India? Discuss 250 words. 250 words. Now, please tell me, did we discuss capitalism yesterday? Right? Capitalism, idea for capitalism. And tell me, right, the first part of the statement. First part of the statement, is it not what we have discussed yesterday? That is, capitalism will guide the world economy to unprecedented growth, unprecedented production, employment, etc., etc. However, it often encourages short-sightedness and contributes to wide disparities. What is meaning of wide disparities? Income inequalities, wealth inequalities between the rich and poor. In this light, would it be correct to believe and adopt capitalism for bringing inclusive growth in India? What do you mean by inclusive growth? Inclusive growth means the growth which will provide benefit to everyone. Simple idea. What is inclusive growth? We'll have a detailed discussion. There's a separate chapter on this. We'll discuss. But in the last class, preferably. What is inclusive growth? The growth which will provide benefit to all. What do you mean by all? I should also get the benefit of growth. You should also get the benefit of growth. Poor people should get the benefit of growth. This is basically inclusive growth. Now, can I basically give you the model answer here? What should be the model answer? Start with introduction. And whenever you write mains answer, 3 components. One is introduction. What should be your introduction? Define capitalism. Simple. Define what is capitalism. Capitalism is a type of an economy wherein for the central problems of the economy, private sector will provide the solution to it. Private sector will provide the solution to it. Then come to the main body. What is the main body here? Right, main body here is basically, right, what are the advantages, benefits, merits of the capitalism? Having said so, what are the demerits of capitalism? Do you remember the demerits of capitalism? Harmful goods are produced. Income inequality will increase. Wealth inequality will increase, etc., etc., etc. Okay, right? So these are the components in the main, right, part of the answer. Then write a conclusion. Then write conclusion. Right? What is a conclusion? Looking at the situation in Indian economy, where the number of poor people are very high, the income inequality is very high, the wealth inequality is very high. Considering all these factors, right, we should not be adopting capitalism. Considering all of these factors, it is not recommended that we have capitalism. Rather than that, a mixed economy model is a better suit, a better fit for Indian economy. That should be the basic, right, model answer for you. But please understand the difficulty of this kind of a question is not that you don't know capitalism. I don't have any doubt. Many of you would have already by-hearted the model of capitalism. But the difficulty will be, how do you fit all of this in 250 words? Correct? Please think of it and let me know. How do you fit all of this into 250 words? How do you fit everything that you have read, by-hearted, in 250 words? Because you are supposed to define capitalism, write advantages, disadvantages or merits and demerits, and then finally give a conclusion also. And this is my tip to you. This is my right advice to you. Do not write too much in introduction. Do not have a very lengthy introduction. Right? Why? There is a limitation of number of words. You will have to write it within 250 words. So do not write a very lengthy introduction. The hero of your answer will be main body. I hope you understand. Or if it is a female-oriented movie, the heroine of that movie will be your main body. Right? So your main body should be very sturdy, very, very good. Trust me, you will get more marks if your main body is very good. And third important point I want to mention here is, Do not write a conclusion which is negative in nature. Is it okay? Do not write a conclusion which is a negative conclusion. Never write it. Right? Why? Please understand. You want to become IAS officer. Correct? Everybody, I know. Right? What is your priority? IAS. IAS. You want to become IAS officers. IAS officers should provide solution to the problem. IAS officers should not create more problems. So that is the reason, right? Simply write a positive. That is, you know that there is a problem means provide a solution then. Provide a solution. That should be your conclusion. Done. This is my recommendation, right? My advice to you, sincere advice. And by the way, advice simply means, right? It can be taken or it can be ignored also. Now it is basically up to you whether to take that advice or not. Done. So let me start with the next chapter today. Sir, but it is biased answer as it favors mixed economy. My dear, we are already following mixed economy, right? We are already following mixed economy. Why do you think we have adopted mixed economy then? Tell me. Why do you think we have adopted mixed economy? Don't you think we have IAS officers who can give recommendation on capitalism? I hope you understand, right? So there will be a model of mixed economy. It is a better model because we are taking features of capitalism, we are taking features of socialism. That's a better model. Okay, done. Let me start with the next chapter. National income aggregates. National income aggregates. What should be the solution? My dear, solution is that we know that there is very higher poverty in India. Correct? We know there is a higher poverty. We know there is also a problem with employment situation. So don't you think your solution or your conclusion should consist of recommendations to address these problems so that the mixed model economy that we are following, right, will help in achieving, right, inclusive growth? That should be your argument. Okay, done. And there was one student who said, sir, the question on the public goods, right? You wrote a public library, right? But you're saying, right, this is non-exclusive, etc. My dear, I've written it very clearly, right? Although initially there was only public library, I corrected and I said a book in a public library. I'm not saying public library. I took the example of a book in a public library. A book in a public library is a rival. It is a rival, right? But this is not excludable. That was the basic argument. Okay, done. So let me start with the next chapter. That is national income aggregate. What are the points we'll be covering under this? Very important chapter. Very important chapter. First, what are the types of income aggregates that we generally discuss? Right, these are the types. Have a look at this. GDP, gross domestic product. GNP, gross national product. NDP, net domestic product. NNP, net national product. And finally, NI, national income. Right, NI is national income. Okay, now understand the next point. What is the new GDP methodology that we are using? This was asked last year in the mains examination. I'll show you the question. Don't worry. In fact, this was asked last year in the mains examination. Per capita income, pro and counter cyclical growth, vicious and virtuous cycle of growth. These two are current affairs. Please be very careful. And the next is, as usual, the questions which have been asked in the last couple of years on this argument or this chapter. Let's start. What are the different aggregates that we generally use? Okay, what are the different aggregates? These are the different aggregates. But if you're reading the newspapers, right, follow my argument now. If you're reading the newspapers, please tell me, will you come across all these aggregates or mainly you will come across the first one? Let me check how many of you read newspapers now. Right, when you read newspapers, will you come across all these aggregates in the newspaper, or you mainly, most of the times, 99% of the times, right, you will come across this, right? GDP is important. GDP is the most important. In case of India, we have adopted model of GDP. That is the reason most of the discussion will be centering around the idea of a GDP itself. Okay. Now, let me start. What is GDP? What do you mean by GDP? Gross domestic product. Gross domestic product simply means the market price of all the final goods and services. I repeat, the market price of all the final goods and services which are produced in India. That's very important. Which are produced in India. Right? Where they are consumed does not matter. Where they are used does not matter. These final goods and services should be produced in India. So whatever is the market price of all these final goods and services, if I count it, that is called as gross domestic product. We can calculate gross domestic product for India, for USA, for China, for Great Britain, for every country, we can calculate GDP. Point number 2. I've used the term time period here. And I've used the term time period. What is the meaning of a time period? There is a term called as a financial year. Please remember this. Very often you'll come across this in the newspaper. There's a term called as a financial year. Right? I can use the term financial year, or else they will write a short form of this, FY, or they will also simply use the term fiscal year. All are one and the same. Right? I can use the term financial year, FY, or fiscal year. All of them mean simply one thing. Financial year starts from the 1st of April, and will continue up to 31st of March. Any difficulty, please do let me know. Financial year will start from the 1st of April, will continue up to 31st of March. And this financial year is generally divided into 4 quarters. Is generally divided into 4 quarters, or you can also say 2 half years. Right? Into 2 half years. Right? You can simply say it is divided into 4 quarters, or it is also divided into 2 half years. For example, from April, May, June. April to June, we'll call this as a quarter 1. Then July, August, September, July to September, this is called as a quarter 2. Right? Then October to December, you can count it. It will be 3 months. This will be referred to as a third quarter. And then from January to the next year, March, this is a fourth quarter. Then if you want to divide that into 2 equal half years, right? Basically, then, right, understand this. We will start from the month of April, right? And we will count it till September. Then October to March. Right, October to March. This is, right, half a financial year. This is 4 quarters. Point number 3. GDP for India, we calculate it quarter-wise. Point number 3. GDP in India, we calculate it quarter-wise. Right? We'll calculate for quarter, we'll calculate for half a financial year, and we will calculate for full financial year as well. We'll calculate it for full financial year as well. Now, who will calculate? Who will publish GDP data? It is published by NSO. Now, please tell me, have you come across the term NSO in the newspapers? Sunday, I asked you to read a newspaper article. Have you come across the term NSO in the newspapers on Sunday's newspaper? Right? NSO stands for National Statistical Office. Right? A National Statistical Office. Right? This National Statistical Office will function under Ministry of Statistics and Program Implementation. Statistics and Program Implementation. So NSO functions under, right, MOSPI. That is a Ministry of Statistics and Program Implementation. Right? That is the next point. Now, fifth point, how do we calculate GDP then? How do we calculate GDP? How? There are three methods to calculate a GDP. We'll go one after the other. There are three methods to calculate GDP. Point number one, or method number one, output or product value method. Output or product value method. Please look at the formula. Total output into market prices. And what do you mean by total output here? Whatever final goods and services which are produced. Right? We generally do not count, I repeat, in calculation of GDP, that is GDP number, we should exclude intermediary goods. We should not be including intermediary goods. Why? Let me explain. Imagine this is the only product manufactured in India. Right? Imagine. Let's make it simple. Imagine this is the only product manufactured in India. Now, to manufacture this product, you will use a steel. Cost is, let's say, 30 rupees. You will use a plastic. Let's say cost is 20 rupees. And the market price of this bottle is 100 rupees. Now, the problem is, if you count price of steel, plastic, as well as price of the bottle, don't you think you're counting steel 2 times? Let me know. Right? Don't you think you're counting steel, value of the steel twice? Value of plastic twice. Right? Do you think the GDP value is a correct number? No. That is a precise reason. In order to avoid, remember this, tomorrow we'll be using this concept again. In order to avoid double counting, misrepresentation of the GDP number, we will have to exclude the value of the inputs. Any problem with this? We will have to exclude value of the inputs. Right? Exclude the value of the inputs, count only final goods and services market price, that is GDP to you. Right? For example, right, I said, imagine there are 10 final goods and services manufactured in India, produced in India. Imagine 10 final goods and services manufactured or produced in India. And let's say market price of these 10 goods is 15 rupees per unit. So what will happen to GDP? The GDP number will be 150 rupees. GDP number will be 150 rupees. Any problem with the first method? Please do let me know now. Any problem with the first method? Can I go to the second method now? Second one is income method. Second one is income method. Now, please, right, just let me know, do you remember the concept of factor incomes? Did you revise yesterday's class? Do you remember the concept of factor incomes? What do you mean by factor incomes? In the market, to the manufacturer will provide factor services. It could be capital, it could be land, it could be anything. Will provide factors of production. And when you provide factors of production, you will earn a certain income. Because it is income associated with factors of production, we'll simply call it as factor incomes. Factor incomes. Now, right, how do we use these to calculate GDP? How do we use factor incomes to calculate GDP? Let me give a very simple example. First and foremost, right, you tell me, imagine you're a manufacturer. Imagine you're a manufacturer, you want to manufacture this bottle. Can I say you'll use the factors of production? Anybody disagrees with me? Imagine you're a manufacturer, you want to manufacture this bottle, you'll use the factors of production. What are the factors of production? Land, labor, capital, and entrepreneurship. Entrepreneurship, correct? Now, when the company purchases land, that is anything that is a resource, land naturally available, company pays rent. Now, what is the factor income? This is factor cost. What is the factor income? Factor income is also rent. For labor, it is wages, and income is also wages here. For capital, it is interest, and income is also interest here. And finally, entrepreneurship, it is a profit here, and it is also profit here. So one side is a factor cost, another side is a factor income. One side is a factor cost, another side is a factor income. Now please tell me, if you are a manufacturer, you want to decide what is the price of the bottle. I repeat, you are a manufacturer. You want to decide the price of the bottle. Will you not include all these factors to decide the price of the bottle? Let me know. Does it make sense to you or not? Will you not add all of these to arrive at price of the bottle? Let's say price of the bottle is 100. Now, if a price of the bottle under the cost methodology, think of it. If price of the bottle under the factor cost method is 100 rupees, what should be the price of the bottle under factor income method? 100 rupee? Does it make sense to you? Yes or no? Right? Which means, I'm going to one more point now, which means whether you calculate GDP under the cost method, or income method, the value of GDP should remain same. Some of you worried about taxes, etc. I will tell you tomorrow how taxes are adjusted. Have patience. Don't worry, I'll tell you how taxes would be adjusted, etc. I will tell you that. Don't worry, just wait for some time. Right? So basically, my argument is you take the sum total of all the factor incomes. You take the sum total of all the factor incomes. Can we calculate GDP using this method? Of course, yes. But more importantly, can I say that, right, whatever is the value of GDP I get under factor income method should be same as whatever is the GDP value under the cost method, under output method. Anybody has a problem with this? Anybody has a problem? Right? I'm showing you the numbers right in front of you. Right? Value should be same. In fact, remember this. I'll go to the third point here. Right? I'll go to the third point. The argument is whether you calculate GDP using the first method, second method, or third method. Whether you calculate GDP using the first, second, or third method doesn't matter. Value of GDP should always be one and the same. You should get the same value of GDP under all the three methods. Now let me talk about third method here. Expenditure method. Let me talk about the third method, expenditure method. Now, what is the concept of expenditure method? Follow this carefully. Expenditure method simply measures how much is the total expenditure done on goods and services. Simple argument. How much is the total expenditure done on final goods and services? Now, please tell me, if market price of this bottle is 150 rupees, this is a final good. If the market price of this bottle is 150 rupees and you purchase this bottle, can I say your expenditure is 150 rupees? Any problem with this? I'm taking a very simple example. Imagine only one bottle is produced in India. Final goods and service, only one bottle. And the market price of the bottle is 150. So can I write GDP through production method? GDP through production method is 150 rupees. Only one final good into market price. Now you will purchase this final good. How much money will you pay? 150 rupees. Now I'm talking about total expenditure done in India. Total expenditure done on final goods and services. How much is the total expenditure done by you on final goods and services? 150 rupees. Now tell me, is it okay if I say, right, whether you calculate GDP through production method or expenditure method, value should be one and the same? Any difficulty? Whether you calculate GDP through production method right, or expenditure method, value should be one and the same. Can I go forward now? Can I explain to you the formula for the GDP, the expenditure method? Repeat. Arey my dear. Output method. In output method, what do we calculate? GDP, how do we calculate it? Whatever is the final goods and services into market price. I am saying, imagine only one final good is produced. Imagine only one final good and service is produced, right? And the market price is 150. What is GDP through production method? GDP through production or output method is 150 rupees. Come to the expenditure method. In expenditure method, what do we measure? How much money do we spend on final goods and services? If only one good is produced, you will purchase this good. Market price is 150. What is GDP through expenditure method? 150 rupees. So output method 150, expenditure method is also 150. Right? So value should be same. Now some of you are worried about taxation. Listen to me first. Did I say or not? Please correct me if I'm wrong. Earlier, did I say or not? Tomorrow I will tell you how taxes would be adjusted. Let me know. Did I say this? Nine. Right? I want answer now only. Tell me how taxes will be adjusted. Tell me now, tell me now, tell me now. Have patience. We'll discuss. It's not over. We'll discuss. Tomorrow in the first half, you will only say, sir, stop with GDP calculation. I'll give you so many concepts. Have patience. Come to the point here. Now, is the logic okay? Right? Whether you calculate GDP through production, expenditure, or income method, value should be same. But what is the formula? How do we calculate through expenditure method? Simple. Have a look at this. Right? Imagine 100 bottles are manufactured. Simple. Imagine 100 bottles are manufactured. Can I say out of 100, some of them will be exported to USA? Let me know. Imagine 100 bottles are manufactured. This is a final good. Out of 100 goods, some of these goods will be exported to USA. Point number one. Remember, some goods are exported, which means although the bottles are consumed in USA, I will have to count the market price of the bottle when I calculate India's GDP. Point number two. Right? In India, we will spend money on bottles as well as on, let's say, mobile phones. Simple argument. In India, let's say, all of us means what? Can I say government of India? That is government, central government, state government. Plus, right, the companies, that is the firms, plus houses, that is households. Please do let me know. Right, in case of India, right, government, firms and households will spend money on mobiles as well as bottles. Let's say only two goods. But what if I say all the mobiles that we are using in India are imported? Think of this. Let's say government will spend 100 rupee, companies will spend 200, and households will spend 300 rupees. What if I say the mobile phones are imported in India? Now, if total expenditure here is 600 on bottles plus mobiles, don't you think I should be subtracting the value of the mobiles from this value if I want to calculate GDP for India? Participate and let me know. And because the mobile phones are imported, these were manufactured, let's say in USA, do you think we should include the value of mobile phones in calculation of India's GDP? No, because these were manufactured outside India. Now, can I write it like this? From this number, I will subtract value of mobile phones and I will add value of bottles which are exported. Any difficulty? Please do let me know. This is the formula. From this number, I will subtract what is the value of mobile phone. In simple terms, what is the value of imports? And I will add the value of exports. Which means I'm trying to find out how much is the total expenditure on final goods and services which were manufactured in India. Which were manufactured in India. Any problem here? This is the formula. This is the formula. Let me show it to you. Expenditure method, the formula is C. What is C? How much all of us are spending. Expenditure by households, that is C. What is I? Expenditure done by companies. Expenditure done by companies. And what is G? Expenditure done by the government. From this total expenditure, I will subtract what is the value of imports and I will add the value of exports. From all of this, I'll subtract the value of imports. I will add the value of exports. What is left out? What is left out then? Total expenditure done on goods and services which are manufactured in India. Is it okay? Is the formula okay with all of you? Let me know. We'll stop the discussion now. I'll address the questions. Any problem with, write the formula here. Ultimately, the argument is simple. What is the market price of goods and services produced in India? You should find that, right? So we can use expenditure method, we can use output method, right? We can use even income method. Can we go forward now? We'll stop the discussion today here. If you have any questions, please do let me know so that we can conclude the session for today. If the factor cost or expenditure is 100, then GDP will be 100. Is it right? Again, please understand, certain adjustments are done. I'll explain the full calculation tomorrow. That is basically, taxes will have to be adjusted, subsidies will have to be adjusted. I will tell you how taxes and subsidies will be adjusted tomorrow. Have patience. Okay. Money spent by government on infrastructure in the economy will circulate and reach households and they will spend the same. Won't it lead to double counting? No. No. Right? It will not lead to double counting. Okay. Okay. Before I take up questions, there's a feedback form which has been sent to you. For the earlier classes, that is the polity classes, a feedback form has been sent to you. Please fill in, provide your honest feedback for the polity classes. Okay. Explain product value method again. I'll repeat it. In product value method, we take all the final goods and services and multiply with market prices. Right? That is basically how product value method is calculated. Okay. Sir, why no value addition in final good? My dear, if you keep on counting the intermediary goods, that will lead to double counting. What is the impact of inflation on GDP? We are yet to take up inflation. Don't worry, we'll discuss inflation later. Spillover is negative for alcohol. How? My dear, if you consume more alcohol, you can harm others. You can basically drive into a crowd of people, kill others. Right? And moreover, if you keep on drinking alcohol, your productivity will be affected. Right? Your salary can be cut. You can be removed from the job. So negative spillover effect. Tomatoes comes under which good? Tomato is an essential good. But somebody's savings is used for somebody else's investment. Can the faculty please answer? Of course, yes, that is how the money circulates in the economy. Right? Is it okay if I use a statement? Somebody's expenditure is somebody else's income? Let me know. Somebody's expenditure is somebody else's income. For example, you're owner of a company. If you employ me, you will pay me salary. That is your expenditure. But for me, it is an income. That is how the whole economy will function. That is how the money gets circulated. During COVID, supply of sanitizer was inelastic initially, but after government intervention, it became elastic. Yes, initially, it was difficult to get the access to the sanitizer, but over the period of time, supply increased. If we are engineering background, what should we do to understand economics? Read. Doesn't matter which background you have, please read. Okay, make your fundamentals strong. Okay, unsold finished at the end of the year becomes capital. Yes, unfinished goods counted as a part of capital. Unsold goods will also be counted as part of capital because the money has already been spent. ID is greater than 0, ID is less than 0. My dear, right? In case of income, we have discussed normal goods and inferior goods. Right? We have discussed this idea at least 10 times now. If income goes up, right, demand for a good will go down, which means income goes up means your income is increasing plus let's say 10%. Demand for a product will go down, let's say minus 10%. Substitute, outcome will be negative, that is less than 0. Right? That is an inferior good. On the other side, it will be a normal good. Assembled goods within territory is included in GDP. My dear, tell me, did we not discuss what is the impact on imports and exports? What is the impact of imports and exports on a value of GDP? Did we not discuss this? Okay. Do you discuss about prelims and mains for economics on every Friday? What are we doing after end of every chapter then? What are we doing after the end of the first chapter? Did we not discuss questions which have come in prelims as well as mains at the end of the first chapter? Okay. In expenditure method, investment includes gross capital formation and not just gross capital formation. Why? Again, I'll prove that tomorrow. Right? Generally understand this. We take I, that is investment done by the companies, right? In the form of a gross fixed capital formation. Basically, in the form of investments are done to calculate. Because I'll tell you, there is a calculation done. Whatever is unfinished goods, whatever is inventory, etc. It is taken as a CIS, right? If you read the documents of Government of India, which I don't recommend, there is a term called as change in stocks. Change in stocks is taken separately and it gets added. Although it is an investment, it gets added separately. Okay. Rather than saying my question is not answered, please tell me what is your question. How complementary products? My goodness. If price of the printer goes up, what will happen to demand for ink? You apply logic, no? We have discussed this yesterday also, today also. If the price of printer goes up, what will happen to demand for ink? Automatically it should go down. That is a complementary goods. It means the transportation of goods will affect elasticity. My dear, elasticity is more associated with price and right the supply factors. Why are we adding number of imports? Where are we adding number of imports? You tell me. Where are we adding number of imports? It is minus imports, right? Please look at it very carefully. Okay, done then. Let me stop the discussion here today. We'll continue with the discussion